All right, guys, we're talking about the top stocks to watch for Monday's open. We've got some surprises for you and some new stocks this week as well. We're going to touch on where we are in the S&P 500, the different sectors, how they performed year to date, some of the economic news that's coming out next week, the fear and greed index, and we're going to break down those best setups. Should be a fun video for you here today. One thing I ask, one thing only, make sure you smash that like button down below. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers, and I appreciate each and every one of you. So let's jump into it. All right, guys, here's this week's economic news. The Fed held interest rates steady this week, maintaining the Fed funds rate at 4.25 to 4.5, so it's been unchanged since December. And despite ongoing political pressure for rate cuts, the Fed signaled there's 2 rate cut reductions possible the rest of this year. And GDP growth for 2025 was revised down to 1.4%. And then lastly, the Fed statement noted that economic uncertainty has lessened somewhat, but risk remained elevated, especially as the White House and China continue those tariff negotiations. All right, for the labor market, May's jobs reports showed the U.S. economy added 139,000 jobs with strength in healthcare and leisure sectors, but declines in federal government and manufacturing. The unemployment rate held steady at 4.2% for the third straight month. Those trade talks, the tariff talks, they're still going to be key moving forward. U.S. manufacturing contracted for the third consecutive month in May as new tariffs and supply chain disruptions led to the longest supplier delivery times in nearly 3 years. The manufacturing PMI fell further into contraction territory, and analysts warn that inconsistent tariff policies are complicating things. Although a court temporarily halted most tariffs last week, a Fed appeals court quickly reinstated them. This was key to keeping things moving going forward. Now, tariffs are expected to peak later this year, further weighing on growth and contributing to a fragile outlook in the labor market. So I think there's still some ups and downs ahead for us. All right, guys, here's the 5-day sector tracker from last week, and you can see healthcare was down big, 2.5%, and we had energy up, but you can see the other sectors, small movements. And then year to date, where we're at, communications services is up big, as well as real estate. And wow, these numbers are incorrect. So let's look at the 6 months. Year to date, why is that off? I don't know. We'll look at the last year. If you look at the last year, though, everything was up. All right, moving on. Some of the economic news that's coming out this week. We've got, it's really the second half of the week. So on Thursday, we've got jobless claims, 248,000 expected for this report. And then we've got PCE coming out on Friday. And we've got 0.1 expected with PCE year over year of 2.3% and core PCE 2.6. And where we are right now in the fear and greed index, we're right on the verge of neutral and greed. So, you know, when we get in that greed zone, I want to have money on the sidelines waiting for a bit of a pullback. But right now I'm pretty well invested, but, you know, you want to have somewhere, you know, between probably I want to have around 25% on the sidelines waiting to put in. And this is just in my option trading account. And right now, I'm actually a little bit more invested than that because I'm not too worried about the market falling too much further. As far as interest rates going forward, here we are in June. Well, actually, no, we moved to July now. The June numbers just reported, and they kept them the same. So we're still at 4.25 to 4.5. There's still 2 rate cuts expected this year. One next month well, not next month, September. And then October, it's expected to stay the same, 45% chance of keeping it the same at that 4 to 4.25. And then one more cut, another quarter in December, 3.25 to 4. So we'll see how that plays out going forward. All right, guys, here's the Tasty Trade option trading platform. There's a link down below. Check it out. lots of features and benefits. If you go through my link, there's definitely some benefits as well. So I'm not going to go through every one of these trades, but let's go through the top trades for this coming week. Apple's the first one, and if we look at the chart for Apple, you can see it's been trending down lately, but again, I think there's support down here. Wow, way down at 170. We're at 201 right now. There's actually good support right here at 195, so I don't think it can drop that much further. Apple is super strong financially, great balance sheet, great numbers. My target for Apple is 230. It's at 201 right now, so big upside. They had a developers conference, didn't really get a big jump out of that, but they haven't been innovating, so we'll see what comes out here in the next quarter or two. But the new tariff threats that proposed tariffs on imports from European, it was a big tariff hit to Apple for products not manufactured in the U.S., but we'll see how the tariffs play out as well going forward. But again, a strong stock like Apple, I'm not too worried about long term, and I definitely want to be in it right now at this level. So that's the main reason for it moving forward. Next one, let's see what we've got on in Apple. I've got a put spread, 190, 200 put credit spread. So we're actually right at the profit zone. If you go to trade and then we go on the curve and then analysis, you can see the profit. We make max profit. We keep that amount collected up front, which was 251 when we placed the trade. And we're still in the profit zone right now at 201 until we move down to this range. But at that point, I'll just roll to the next month. So we're still in a good range right there. Next one is Adobe. That's high on my list right now. I'm going to show you guys what I'm doing real quick here. If you look at my tracker, what I do is, so here's for Adobe. We'll just go through this one live on the tracker. But you can see the current price is 376. And then these numbers, here's the first one trending right here. So the 50, 200-day moving average, I'll look at that. Then I'll look at the support and the resistance. And then, so these are short-term trends and how the stock is looking in the short term. Same with the Bollinger Band. 3 is the short term, the RSI Bollinger Band. I'll look at that. I just use the Bollinger Band. They're very similar. And the fundamentals, I want to have strong fundamentals. So you can see right here for Adobe, very strong, PE of 20, PEG, price to earnings to growth of 1.3. They've got a 12% growth, strong growth going forward. And then I look at the macro, where we are, and then the fear and greed index, that's the macro, that's where the market is, and we were right at that 60. So that's actually not real favorable for investing big in the market right now. And then the 12-month range, I want to see a high ceiling there. It's been at 587. It's at 376 now. So a high ceiling. And then the last 3 earnings, beat, and then a buy ratings, strong buy ratings from the analysts. So that's all positive as well. My 1-year target is 500. So I look at what Yahoo and the analysts have, Yahoo Finance, where they've got the different analyst ratings, and where the analysts are seeing it and where I see it. So I don't always agree with them, but and my numbers are typically different, but a lot of the time in the same range. But 500 is where I've got it, so much higher than the current 376. And then I put my notes, my long-term notes, and then the short-term catalyst, and then I just kind of go through that. So, all right, with that, let's go back to the Tasty Trade platform, and then let's look at Adobe. So it's trading at 376. We kind of covered this one already. If you look at that chart, here's the Bollinger Bands in white, and then the green is the 50-day moving average, and the red is the 200. And this is trending down, so it doesn't look good. But we are at the bottom of that Bollinger Band, and there is support at the level that we're at right now. But I think Adobe has huge upside. Their numbers are great, but they beat earnings. And but with that Israel situation going on, it just kind of got wrecked at that time. But they've got the Firefly app coming out, and this is a great buy the dip opportunity. It's a SaaS, a software as a service company, And with this dip, I think expectations, they beat earnings, but expectations were they didn't come out with screaming expectations. So there was high expectations, and I guess the market wanted more, but it's a buy the dip opportunity for me. All right, we're not going to spend this much on each one going forward. We're going to kind of move through these. AI is the next one, and with AI, it's trading right now at 23. My target is much higher. It's 35. And yeah, so basically just based on the price right now, for me, you can see the 50s just coming up on that 200-day. I expect it to overtake it and keep moving up. They've had 3 beats, last 3 earnings releases. And this is the range right here at 23 that I've got in my notes to actually look to buy and go long. So that is what I'm doing in AI. And I've got a leaps option on and then a 25 short-term call that I sold against it. All right. So that's a poor man's covered call. AMD, I've got 3 poor man's covered calls on. It's at 128. So it did have a recent move up and it's been trending up. We've got that 50 breaking above. Getting ready to break above the 200, huge bullish move for it. And I want to have the max 3 tranches I've got in my notes on right now. And I've got 3 on, and my short strikes are at 130 and 135. So I think in perfect position right now. Amazon is and they've got the MI 350 and MI 400 coming out later this year. And the way I look at it with leaps options in AMD, you can pay that off in less than 6 months. If you buy a deep in the money leaps option out at this, in March, and then sell short-term calls against it monthly, you can end up, making as much as it costs to do it, to put it on. And then that basically pays for you to control 100 shares for free. That's the way I look at it, at least. I've got a Iron Condor on right now in Amazon. So you can see if you go to the trade, we're right in the middle of it right here on the curve mode. You can see the profit zone. So I like it where it's at right now. Like the chart. Fundamentals are going to be outstanding. If you look at the revenue, net income trending up, assets, liabilities trending up. Curious what they've got. Wow, 49% gross margin. But yeah, Amazon, they're a behemoth, and my target for Amazon is much higher than where it's at right now. It's 250 and it's trading at 209, so it's still room to move there. So I've got both sides on because I don't think it's going to jump up to 250 right now, and it's kind of been trading in that range. So that's why I've got the Iron Condor on. But I would tend to lean a little bit long at this time as well. Arista Networks, they do switches for networking equipment for the AI build out. 95, so we're in the red right here. If you look, we're in that red zone. I needed to move up above this 92 to be profitable. So hurting a little bit on that one. The chart, you can see it's down, but we're at that bottom end of the Bollinger Band, and the 50's coming up on the 200-day moving average. So I like to set up the chart here for Arista Networks. Hang on. And I think it's got a huge growth opportunity. My target is 120, and it's trading at 86 right now, so big room to move. And again, it's that data center build out. It was down due to a little bit of weak guidance following earnings, and then NVIDIA announced they were entering the switch marketplace, and it dropped 6% on that news. But if you look deeper into it, Arista Network has a huge share of that switch AI marketplace, and NVIDIA is going to have a tiny, I don't know what it is, 2% or what, but it's not going to affect Arista Network, if very little, if at all. So I'm not worried about that, and I just see it as a buy-in opportunity. Applied Digital has been strong. We've done really well in it. over the last, I think in the last 30 days, it's down, and I'll show you why. This one's kind of interesting. But you can see right here, it went way up. So we did really well. But then look at this big drop just in the last few days. So in the last 30 days, we've lost $971. But if you look a year out, we've made $26.70. So we were up at $36.70 before, but hey, that's what happens with trading. We go through these ups and downs. But I probably should have got out and totally closed out at this stage. When you're at this high on the Bollinger Band, then good time to get out or go short. So probably missed one there. But let's see. I'm not big. Yeah, I've only got one tranche on, so I didn't really care. And you know what? I didn't want to sell my 10 because I'm out 572 days. I'm out almost 2 years. So I was just going to keep these anyway. And I've been selling calls and then closing them and playing that back and forth. But I've got the 11s on right now. So I'll make another $500 right here on these if it stays below 11 in the next 26 days. So I'm not worried about it. Any move up, I'll add on the other remaining 4 that I can add against my leaps. And if it continues to move down, I'll take these 6 off and then just wait until we have a move up again. All right, app 11. I'm thinking app server. No, app 11. This is a great run company, and I like it long term. They've had a little bit of a pullback, and this is what I was waiting for. As soon as we get down to that 200-day moving average, or right where we are right now, I'm looking to get in. We were down 5% on Friday. So I've got an order in below the market, the 320, 310, and I'm going to throw this on Monday. Hopefully the market's down so I can, so it'll be, I even get a better price. But I'm going to place this trade in app 11 Monday, and my target for these guys is 460. It's at 324 right now. They beat the last 3 quarters, extreme buy by the analyst and ratings. It's got to be a core position I've got in my notes long term. They do advertising and monetizing of apps, and they've got a proven CEO and management. And I was just waiting for a short-term pullback, and I'm going to throw on the put credit spread. I like to do put credit spreads when the market's down, as well as poor man's covered calls, but the calls on this $324 stock are going to be pretty expensive. So I'm going to go with the put credit spread. Next one. Again, I said I'm not going to talk about all these, but if you see one and you want to make a comment down below and have me cover it, I'm happy to answer any questions on any of these stocks. But Dell is the next one that I see as a good buy right now. 119 it's at right now, and we've got the 50 coming up on the 200, and I've got a poor man's covered call on in Dell right now. They've got, they've talked about a new server deal with Elon. They've got server deals with all the big guys out there, so I'm not concerned at all about Dell. What I do like is the chart setup, and there's kind of a double bottom here, boom, boom, and then it had a breakout, and now we've got the 50 coming above the 200. But the 52-week range is all the way from 60 up to 180, and we're at 119 right now, and 3 strong quarters, and my target's 150, so still a lot of room to move up with Dell. Next one that I think is great is Google right now. If we look at Google, McDougal, we've got 2 leaps and a put spread. I sold off, so last week we had that drop, so right here, and I closed out my short calls. So you can see I've only got on the put credit spread and then the 2 leaps. So any big move, we had down 3.85% on Friday. So as soon as we get a move up, I'm going to throw back on the 2 short calls against my leaps positions and look to collect on that. But my target, again, for Google is probably 200. Yeah, I've got 215 as a target long term. GitLab, I think, is a great buy. I think it also had, double bottom. Look at that. And we're down there in that range, low on the Bollinger. So a lot of support here. I look for a move up. And GitLab is a great company. They've had 3 beats, last 3 earnings, and strong buy. My target's 70. It's at 40 right now, so huge. It dropped last week big on outage by Google, so that's why Google dropped as well. Yeah, forgot. But Google had an outage that affected their service, and GitLab was affected by that as well. So it was down big last week just based upon that. But to me, that's a short-term thing. I mean, it happens, but that doesn't happen often, especially with Google. And, it's probably in the long term a good thing, because that same situation that happened, the reason that it dropped, probably won't happen again. So it's a learning experience, and they move on, but it's not something that's going to continue most likely. So I look at that as a good thing. But these guys are an open source code development platform for AI, security, and IT operations. So, I mean, what sectors are better than those? So I love GitLab from here. Let's see, what do we've got next on the list? Lilly. So yeah, get some diversification. We don't need all AI stocks, but drug stock. And drug stocks have been beaten down. Look at that. But look at this support down here, and we had a drop last week. So to me, Lilly is just going to print money. Huge pipeline, great drug stock. I've got 3 put spreads on in Lilly. So let's see what that, yeah, you can see what it looks like, but we're still in the profit zone, and we've got a lot of extrinsic to collect. $959, almost $1,000 that we're going to collect in the next 26 days just in Lilly, as long as we stay above that 750 short strike. We're at 70.62 right now, but again, a lot of support down here. I'm not worried about it. I don't foresee it, but if it tested it, then I would just roll the next month and collect more premium. But Lilly's a great setup right here. All right, we're moving pretty quickly through it. Nike is another one right here I like. You can see it's been trending down. So I don't know if you want to catch the falling knife, but I don't know how much further. Nike is a pretty stable stock, and with these tariffs and the manufacturing, that's going to be a key driver. But I think there's even a good dividend with Nike. But Nike, I'm not worried about long term. They've got a new CEO, or Elliott Hill, so he's right sizing the company. I think there's going to be there's been some layoffs, but 3 consecutive earnings beats. And I like Nike long term. The next one that I think is a great buy right now is ServiceNow. So I'm looking to throw on another put spread, 970, 960, right at the money on Monday at market open. And it's you can see it's dropping back to that 200-day moving average. We've got the 50 above the 200, which is good, and we just had a little bit of a pullback. So I like this setup, and I think it's going to bounce off that 200 and move higher. So I'm looking to throw that on Monday. NVIDIA, actually, that's not one I'm going to focus on. It's kind of at a high, you can see right here. So it's not one of my top buys right now, but it's a solid position. So you can see I've got a leaps and a poor man's covered call on. And I'll look for that 150 for it to stay below that. And then I've got 292, almost $300 to collect as long as it does. So I'll keep the long position. All right, PayPal's the next one that I've got as a good long buy. I've got 3 tranches on right now, poor man's covered calls. And if we look at the chart, you can see it's been down. We've got the 50, 200 right there, looking to break out above it. So I like PayPal moving forward. Great PE, it's like 14. The PEG is 1, 13% profit margins. The setup on the chart is good, and the new CEO is really focused on profitability going forward. So I like PayPal right here. And we've got a couple more, actually 3 more, it looks like, left. We've got the Trade Desk is the next one. So let's take a look at TTD. TTD. All right, the chart. We've got what do we have on? We've got a poor man's covered call, and TTD, the chart, way down, then up. We're at the bottom of the Bollinger Band right now, so I look for it to continue up right here. Great company. The 52-week range is from 40 to 140. We're at 68 right now. So I like when we're at the lower end of that range, and we've got huge upside. And they've beat the last 3 quarters. And when I say they beat the last 3 quarters, let me show you really quick what I mean by that. I'll just go to Yahoo Finance, and we will punch in TTD. So let me do that for you right here. Punch in TTD. All right. I like to always just go to that 1 year, but you can see their target's 86. And if we go to the analysis page right here, you can look at right here, 3 beats, 2 cents, 2 cents, but 3 beats, and then consistent revenue and earnings growth. And here's the strong buy and buy ratings by the analyst. And then if you go scroll down further, you can see the growth and 20% expected next year. So that's what I'm looking at. And I just use Yahoo Finance to look at these numbers. But you can see, and remember, those are numbers that are on my charts here. So when we look at TTD right here, you can see that 52-week range. You can see the flag, the technical, the 12-month range right here, the 3 beats, strong buys, 90 price target, and then my notes. And you can see right here, they power digital and cloud advertising software platform, allows advertisers to purchase across thousands of websites, apps, and even streaming TVs now. So they've also got this UID2, which is an upgrade from those cookies that advertisers use. And that's going to be a requirement, my understanding, from the government moving forward. So they're already set up for that, which is great. They did have a big move up, but no, that's previous. I got to get rid of that one. But yeah, I think TTD is a great one right now. So, all right, what do we have next? And I've got a poor man's covered call on there. UNH, and look at the chart on UNH, way down. So to me, I mean, huge healthcare company, huge. Wow, I don't know what happened there. I'm not going to look at that. That doesn't look correct. But UNH is way down right now. If we look at the chart, look at that. Woo! And they do have strong financials, big dividend, and I'm not worried about. They've got huge, lobbyists that lobby for the healthcare sector, and just the numbers alone is incredible. I'm not worried about UNH long term, and to me, it's a buy the dip opportunity. So, and what do I have? I'm just doing put spreads in UNH, and we're at 300, 290, so we're right at that range. You can see here on the curve mode, we're still in the profit range on UNH. All right, last one, Upstart. Where are we with Upstart? Upstart, beautiful pattern, kind of a pennant flag, and 50 coming up on the 200. We're at 58, and if I look at my handy dandy tracker for Upstart, lower rates will help. So as we get those rate cuts, that's going to help. My target price is 70. They beat the last 3 times, but what do we have on an Upstart? We've got a poor man's covered call, so we've got a 40 leaps, and we've sold a 57.5 against it. But love Upstart moving forward. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe. If you got something out of this video, make sure to watch this next one. I'll see you in the next video.